Guys, I'm stoked to talk to Jim Bottrell Team. Not because I'm not always excited to talk to Jim, but this story had me, I've been dying to pick your brain about the story about Donald Trump and the 50-year mortgage. You know Jim Bottrell. He is the creator of all the fun commercials here on AM 590 that you hear about Gavin Newsom in California. You can find him at jimhasthebuyers.com. He is the founder of the Jim Bottrell Real Estate Team. Jim, thanks for being with us.
Well, we all hailed to Gavin Newsom, the realtor, the greatest realtor that ever existed, that causes more people to leave California than ever. Man, that guy can sell some homes.
He really can.
Holy mackerel.
And, you know, he's not slowing down. He is going to win again in 2026. I just know it. All right.
Well, he's good for business for me.
That's right. And sad for the rest of us common sense Californians who are like, where did my neighbors go?
Oh, yeah. Oh, they all left. They're in Idaho and Tennessee and Florida is where your neighbors are.
That's where they are. All right. So speaking of buying homes, whether it's inside California or outside, Donald Trump floated the idea this week about a 50-year mortgage. But before we dive into that, can you give us a little history, Jim, about mortgages and how they came about to begin with? It's good to kind of set the parameters here.
Yeah, the little background's always helpful. So if you want to go way back, let's say before roughly the 1850s, you either paid for your home outright or you built it yourself.
Right.
Then from about 1850 to 1930, people were putting roughly 50% down and doing just a 5 to 7 year loan for the rest of it. So as you can tell, both these options were incredibly difficult and cash intensive. And the intensity of the cash requirement kept housing prices really low because so people could, afford it. So fewer buyers mean lower home prices. Then in the 1930s, FHA came about and we started seeing lower down payment and longer term loans. The first 30-year loans were introduced, but weren't not really common until the 1940s when it started to become widely used, but it was limited to new construction homes. And then in 1954, it became the loan that everybody used for both new and existing homes. By the way, all the outcry and doom and gloom that we're hearing today about this 50-year option, that all existed back then when the 30-year loan came out. The difference is that people didn't have social media nor biased media blowing it up like we do today. Mm-hmm. That's the only difference.
All right. So why then would Trump bring up a 50-year mortgage? And are there any advantages to this?
Yeah, well, the biggest problem with being able to buy a home today is the monthly payment. It's not really the down payment. There are many zero down loans, low down payment loans, down payment assistant loans. And of course, what I did when I bought my very first house as a young lieutenant in my 20s, when I needed a little bit more money than I had, actually quite a lot more money than I had, is I played the, quote, who loves me, end quote, game.
I love that game.
Who loves me? Who can give me some money? All right, so very common, by the way. The who love me game is very, very common. So it's just what it is, especially in your first house. So you asked what the advantages are. Let's say that you're a buyer and you love a home, but then the lender comes back and says, hey, I'm sorry, we can't qualify you for that home in a 30-year fixed mortgage, right? Well, the advantage is that same lender, if this 50-year thing goes through, will then be able to say, hey, while we can't qualify you in a 30-year mortgage, we can qualify you for that same home on a 50-year mortgage, so welcome home, right? So the reason for that is the lenders, they qualify buyers based on their payment as a percentage of their gross income. If the payment is lower, like it would be with a 50-year loan, then they would qualify for more home and possibly the opportunity to own a piece of the American dream.
So is the payment difference between a 30-year mortgage and a 50-year mortgage that different, that impactful for people?
No, it's just a couple $100. Yeah. I mean, honestly, the richest people that I know all use interest-only loans.
Wow.
Like they don't pay any principal at all. Because it's just kind of, I don't like paying principal. It's putting your money in jail.
Because you can pay your interest and then just pay a piece of your principal as you go if you have the money,
whatever
right?
you want to do. And let's not forget, you can get a 50-year loan and make that a 30-year loan just by paying a little bit extra principal each month. You don't need to refi to do it. You just pay a little extra. It's easy.
All right. So what are the disadvantages?
Well, the disadvantages is that you would pay interest on your home for 50 years instead of 30 years, which could be substantial, except that it's not. The vast majority of Americans, a 50-year mortgage versus a 30-year mortgage, both those timelines are absolutely irrelevant.
All right, so why do you say it's irrelevant?
Because virtually nobody pays their loan for 30 years. The average homeowner keeps a home for only 12.3 years.
Wow.
And during that 12.3 years, they typically refinance once or maybe twice or sometimes more. My point is the vast majority of people will refinance or sell their home prior to the 30-year mark. I mean, almost nobody keeps a loan for 30 years. So the 50-year loan is absolutely irrelevant, except that it could make a dream home attainable if the only option for the 30-year loan, if that was the only option that existed, those people end up staying renters.
Okay, so I've heard a lot of people in conservative radio who are saying they don't like this idea. Why are there so many naysayers?
Well, I see more of it on the liberal media, but just the media too.
Well, that's because the liberal media is all naysayers.
Well, just like no matter what, the guy could literally cure cancer for 98% of the people, and they'd come back and say, "Look at these poor 2%. He totally ignored them." All right. Anyway, side.
But
note,
Jeffrey Epstein. Oh wait, sorry.
I know. Well, that's a whole different topic there. All right. So why are there so many naysayers about the 50-year loan? Well, honestly, I think they're just trying to get clicks. Trying to get clicks and views. But there's two basic stories as to why it's awful. Some are saying that the 50-year loan will replace the 30-year loan. No, it's not a replacement. It's an option if you need it to get the home that you really want versus a lesser home or staying a renter. And the second big thing is they're saying the total interest you'll pay over the life of a 50-year loan would be 86% more than the interest you pay on a 30-year loan. But that's if it's taken to full maturity, which we've already established isn't going to happen.
Sure.
Right? So my point remains, though, almost nobody will ever take either a 50-year loan nor a 30-year loan to full maturity. So what difference does it make? This 50-year mortgage may help people get the home they love when a 30-year mortgage loan maybe won't help them. I think it's a great option.
All right. So you've convinced me on that. Now, what about the new portable loans that we just heard about?
Yeah, that is brand new. First of all, when I say brand new, I mean, this is like brand new. They're just evaluating it right now. It's a new idea. There isn't a ton of actual information on it yet, a lot of speculation, but here's what I was able to find out. Here's the issue that we have in the real estate market. Since those super low mortgage interest rates of 2021, where virtually everybody refinanced in a 2% or 3% loan, the real estate market has been locked up because people are unwilling to sell their home and give up their super low interest rate. And that's despite how much their home doesn't fit their needs anymore.
Right.
I mean, I've been saying this quote, I used to love my home, but now I love my interest rate.
I think a lot of us feel that way.
Yeah, I mean, everybody feels that. That's why, so many people are remodeling. They're like, I hate this kitchen. I hate this home. Well, I don't want to give up my 2.5% mortgage, so let's just redo the kitchen. All right, so anyway, the Trump administration is trying to figure out a way to make homes more affordable, but also open up the real estate market a little bit. And for the last couple of years, there have been even fewer homes for sale than usual simply because people won't give up that super low interest rate. So by making the loan portable, to where you can take your existing low interest rate to a new home, that could potentially alleviate that problem.
Now, how would the portable mortgages actually work?
Well, yeah, everything is still speculation right now, but what I found out is probably better explained by an example.
Okay.
Let's say that a person bought a home back in 2021 for $500,000, and they had a 2.5% loan. And let's also say they used a VA loan with no down payments, just for simplicity. So they had a $500,000 loan, and again, for simplicity, let's say that they've paid that over the last 4 or 5 years. They now owe $460 on that loan today. But the problem is the home they're living in does not fit their needs anymore. They either have too many kids and too few bedrooms, or the opposite, where all the kids have moved out and they're old and they can't go up and down the stairs anymore. Either way, the home doesn't fit their needs. The way things are today, those people simply aren't moving. They're going to stay in their home that does not fit their needs because they have a 2.5% interest rate. The unfortunate part is there are people who really need that home, but those homeowners are not selling it. So from what I've been able to gather is this $460,000 loan at 2.5% interest can be transferred to a new home, which would allow the family to move into a home that better fits their needs, and at the same time, it would free up their existing home to some other family who really needs it.
All right, so what happens, because it probably will be, if that home is more expensive that they want to move into?
Well, this is where it gets tricky. Let's say the home they want to buy is $750,000, but the home they would be transferring, or that loan they'd be transferring, is only $460,000. Well, that's a problem, because I don't see that existing lender increasing the loan amount from an additional $290,000 at that same 2.5%. I don't see them doing that. However, what I do see is second trust deeds used to be very popular. I mean, when I bought my first home, yes, I played the Who Loved Me game, got some help with the down payment and closing costs, but I also had a first mortgage and I had a second mortgage, right? And so all the guidelines to have second trust deeds already exist. So that part's not a big deal. You're just going to understand that second loan, that second smaller loan is not going to be at a super low interest rate, but it does allow you to move the majority of your loan over at that low interest rate.
Finance the balance at today's mortgage rates rather than at the one you were locked into. All right. Are there disadvantages? Because that sounds pretty good. Are there disadvantages that you can see or problems with one of these portable loans?
Oh, I see tons of problems. Yeah, I don't know how they're going to pull it off, to be honest with you.
Oh, no. So it's a great idea, but I don't know
how
we're doing.
I love the idea. I just don't know how you can do it. First of all, the loans out there today that have those super low interest rates, all those contracts, which are called the note, they're tied to one address. So every loan is tied to one address and one address only. So those actual lenders of those loans would have to agree to allow those notes to become portable, to be assigned to a different property. The problem is I don't think those lenders will do that because those lenders, they want those 2.5% loans paid off. They don't want to be collecting 2.5% interest anymore. What they want that 2.5% loan paid off so they can get that money back and reloan it to somebody else at 6.5%, the fair, the market rates today. I think that's probably the single biggest problem and may make all the other problems and the details irrelevant. I don't know how they get past that.
Yeah. All right. So what about a proposed reduction in the minimum FICO score for FHA loans? That was also floated this week.
Yeah, it's another one that's actually really new. Information is very limited. But what I was able to find out is it's not a lowering of the FICO scores, right? Because all of our mortgages are all based on FICO scores, right? Everything we have is based on FICO score. It's a switch from using the FICO system as the determiner to one of two potential new systems that would replace the FICO system. One of them is called Advantage 4.0, and the other one is called the FICO 10T.
Okay, and what do those two do that's different than the regular FICO?
Well, it's all new to me, so I'm going to be honest with you.
So pop quiz.
Yeah, I know. It's all new to me, but I found out is that it appears that these new systems look more at a person's behavior over the past 24 months. Versus the FICO, well, that's actually pretty good, versus the FICO that looks at a much more historical approach. All right, so for example, from what I've learned so far, FICO would hit you for that disputed cell phone bill from 5 years ago, right? While Vantage and FICO 10T would not. Okay. So unfortunately, that's all I know about it so far. By the time we speak next time, there's going to be a lot more information on the 50-year mortgage, portable mortgage, this changed the FICO system. I'll be able to talk a lot more intelligently about it, next time we talk.
All right. So just overall, in our final moments here, what are your overall thoughts of all of these potential changes? Good, bad, indifferent?
I'm glad you asked. My opinion is that the guy is trying. And I mean, the guy referring to Trump. Housing affordability is really tough. I mean, right now we have both the prices and the interest rates are high, and that is a really tough combo. So he's trying a lot of different things. I love these ideas. In fact, I love all three of them. I think they're fantastic. Will all of them work? Probably not. But some of these plans will end up being different. Some of these plans will end up being the difference between a family not being able to afford a piece of the American dream and being able to afford a piece of the American dream. Personally, I like all three options. I think that they would make significant changes to everything in real estate and for a lot of people. I just hope that we're able to pull them off.
Yeah, I feel like it would shake things up a little bit. At least we're trying and exchanging some ideas instead of just accepting the way the system's going, because it's really not working out for many people right now. Jim, always great to have you here. Jim Bottrell. Jim has thebuyers.com is where you can go. It's a great place to start. Jim has thebuyers.com. He's the founder of the Jim Bottrell Real Estate Team. Jim has thebuyers.com. Jim, thanks so much for being with us.
Thank you so much for having me.
If you enjoyed this video and you want to watch more videos like it, be sure to like and subscribe so you can stay up to date in the latest real estate trends and developments. I'm Jim Bottrell, the Jim Bottrell Real Estate Team. I'll see you next time.